evening. You're with ET now. It's 9 p.m. and you're with the India Development Debate. I'm Sandeep Gurumurthi, joining you from the News Centre in Mumbai. Joining me in Delhi is my colleague and co-anchor Supriya. Shrinate. Straight to the big debate tonight. Desperate times call for desperate measures. Faced with an uphill task of raising 80,000 crore rupees from divestment this fiscal, the government is now looking to raise big money by selling a controlling stake in IDBI Bank. And once again, the Rescue Act will be done by none other than LIC, which has been conducting the Bailout Act for this and the previous governments at regular intervals. ET Now's exclusive news break on Friday of a possible LIC-IDBI deal has now stirred a hornet's nest, with economists and market watchers coming down heavily on the government over the proposal. In a big follow-up, we reported earlier today that the board of IDBI will soon discuss an offer from LIC to take over management control of the bank. But there is the other side of the story too. The government has put up a strong defense. It asserts that this is not an investment but an acquisition. Top-level government sources also tell us that the move will help LIC, the only insurer without a bank, to spread its wings in the fast-growing bancassurance space.
Indeed, the idea may sound grand, but there are several hurdles before this deal to happen. First, certain amendments to the LIC Act are necessary to facilitate this deal. Also, LIC requires the green light from insurance regulator IRDA to buy more than 15% stake in IDBI Bank, while an exemption from market regulator SEBI is a must to avoid the mandatory open offer. All these are technicalities, and while no one disputes LIC's need to have a bank of its own, should it sink its teeth in one with a gross NPA of over 28% is really the big question. Also, can LIC turn around IDBI and make it an asset? Can it realistically merge its housing finance business, insurance and banking businesses to create an enviable retail portfolio, or is this too big a bet that one is looking to make? That's exactly what we're debating right here on the India Development Debate tonight, and joining us is a very, very informed panel on this very subject. SB Mathur, former chairman LIC, R. Gopalan, former secretary in the Department of Economic Affairs and former finance secretary, R. Balakrishnan, independent consultant, Gopal Krishna Agrawal, representing the BJP, and Gaurav Vallabh, who represents the Congress. Thank you very much, each one of you, for being with us. And Mr. Mathur, let's begin with you, because you've been at LIC at the helm of affairs. Is it fair on LIC's customers to see their hard-earned money that they have really put a lot of faith with in LIC, flow into toxic assets like IDBI Bank? The bank has bad assets to the tune of over 55,000 crore rupees and stressed assets amounting to 60,000 crore rupees, making it perhaps the most toxic bank in the country.
Well, the basic question that one needs to address is, should LIC own a bank? We have been debating this for a long time, and what is to be seen is that life insurance especially is a distribution business, and a lot of insurance companies are having tie-up or direct, indirect stake in banks. Therefore, fundamentally, it would not be a very bad idea. In fact, it would be a good idea for LIC to have a substantial stake in a bank. The question arises whether IDBI Bank is the right target. One can always argue that there are bad assets, but then there are bad assets all around in the banking industry.
Sure.
This time valuations are low, so one could say it's the most opportune time for LIC to acquire a bank. But
Sure.
should that target bank be IDBI? That remains to be argued, because additional 40% stake in IDBI Bank will require an outgo of 9,000 odd crores.
Right.
With similar investment, one could get a bank with much larger branch network,
Right.
which will facilitate a better distribution capability for LIC.
Okay, it's a fair point you're making. Opening comment from Mr. SB Mathur, former chairman at LIC, is there are 2 points to this debate. One, does LIC need to have a bank? And two, if so, is IDBI the right asset? That in some sense sets the context for this debate. Mr. Balakrishnan, why do you believe, and you've written this piece as well, why do you believe that LIC always has been a quick fix tool for politicians and officials?
Well, I think good evening to all of you. See, I see it that LIC has, as an insurance company, is a custodian of policyholders' money. And history has it that every time there is a crisis somewhere, LIC is asked to bail out the government. Now, Mr. Mathur clearly said that as a strategy, LIC should have a bank. Now, everywhere there are banks and insurance companies owned by promoters. Here, the promoter is the Government of India. It already owns the Life Insurance Corporation of India and more than a dozen banks. So, why does LIC by itself need another bank? I think that is the main question I am raising. And the other thing, of course, why IDBI Bank, what price, all those things can be discussed till the cows come home. I think it's a bad allocation of policyholders' money. I think that is the basic question here of governance or financial prudence.
Okay, let me take this across to Mr. Gopalan, who's been at the Ministry of Finance in his capacity as Finance Secretary and was also Secretary in the Department of Economic Affairs. Now, top government sources that we've been speaking to Mr. Gopalan tell us that this is not an investment being made by an LIC, should not be seen as a bailout, but this is an acquisition that the insurer is making because it wants to be in the banking space. It wants a presence for strategic reasons. Now, instead of setting up a new bank, the government has proposed this takeover. Can there be a dispute over this?
Well, I mean, I would, as a previous speaker mentioned, there is, if government were to, government has many banks, it has got a LIC, so government is the owner of both. It's not very clear as to why government should make LIC buy the IDBI Bank, especially with its, value being so badly eroded. And if it is going to be only by way of government getting more revenue to balance its budget, well, that's an option. But the question is that what are the effect it will have on the finances of LIC, because LIC in any case is a 100 crore capital based company with a government guarantee, and it has close to about 24 lakh crores of assets under management, out of which about 25%, close to about 6 lakh crores will be in equities, and out of which my information is close to about 1.75 to 2 lakh crores are in government PSUs. Especially in the last 3 years, they had ramped up by another about 80-90,000 crores this investment in the PSUs.
Right.
The question is it adding value to LIC's policyholders? I don't know. That's a question which I think on today's numbers, I don't think that will be justified.
Absolutely, that's a fair point you're asking. Is it adding value to LIC's premium holders? Let's take it across to Gopal Krishna Agarwal. Mr. Agarwal, is this a desperate move by the government to meet the divestment targets? Because Air India's privatization has bombed. Somehow you need to reach that figure of 80,000 crores. And so, as has been done in the past by government after government, LIC is being brought to the rescue.
No, we cannot say that this is a desperate attempt by the government. Ultimately, when you go for disinvestment, there are issues, much issues involved, are whether the valuation at which you are getting the share or government is selling, is it right? Already, this is not fixed that the LIC will take up this whole chunk which will be offered on the sale. The issue has to be decided by each board, as has been clarified by the government, that LIC board has to take a call whether that valuation at which they would like to invest into the IDBI Bank, whether that will go into the thing. But ultimately, if you say as far as IDBI valuation is concerned, with the total NPA now transparently being identified, already the valuation at which it will be sold will be will have the impact of whatever loss or whatever NPA amount of NPA, about 28% that already it has exposed to. The thing is whether it is strategically good for this LIC to buy the bank, one question. what is the valuation. I think with the balance sheet now transparently showing the NPA figures and whatever the net worth of IDBI Bank is now transparent, the LIC will definitely get the value of share what it buys for. The third thing is government has all the option to sell on the equity also. It is a listed company, IDBI is a listed company. So, government is not government is not selling its stake, but government is also thinking, as for media reports, is that they want to go for a preferential issue and a new equity capital to the IDBI. So, that in itself, if the IDBI gets at this stage good capital amount with a strong promoter, then its balance sheet will be
Mr. Agarwal, you've put the reasons why the government wants this deal to go through. Mr. Agarwal, I'm sorry, I'll have to cut you short there. I think you broadly put the reasons why the government wants this to go through, but I will take this across to the Congress party. And Gaurav Vallabh, the opposition to this deal is not coming in from you or another spokesperson or somebody who understands economics in the Congress. It's coming in from none other than Ahmed Patel, one of your tallest leaders, one of the closest advisors to Sonia Gandhi. The question that many of us would turn around and ask today is that who is responsible for IDBI's colossal failure? You were saying it's the worst managed bank, but aren't you going to share some part of the responsibility as well? IDBI's bad loan ratio is at 28%. Do you want us to now analyze where and how these bad loans were sanctioned? I know it's tempting to preach there, but this is as much your party's failure as it is for the BJP to now resort to this deal. I mean, the taxpayer is having to pay a price for this, and you can't run away from sharing that blame, can you?
Supriya, precisely you had raised a good question. See, what was the IDBI gross NPA when Congress left the power in 2014 and what is today? It had increased at the rate of 33% per annum compounded annual growth rate. I want to convey, Supriya, that by doing all financial tricks, you can postpone the problem for a short term, but in this process, the problem itself is going to become big. And I will give you the two reasons. What government is trying to do, government is trying to achieve their disinvestment target by this, because the 80,000 crore target, they are not anything near to that target also, and without having any negative impact to the fiscal deficit targets. And second thing, that in future also all capital requirements of the bank, the strategic buyer is going to put that capital, in this case LIC. I am having a very simple genuine question, that from where LIC is getting money? It is 38 crore policyholders money, whose money LIC is investing in the market. So, I am asking that is the policyholders, and most of them are financially illiterate, they are putting their money with the LIC on the faith only. So, LIC is buying, and as per some of the experts, this is around 10,000 crore rupees deal. So, LIC is buying, the policyholders' money they are using, and they are putting their money in a asset which is a junk asset. So,
Gaurav Vallabh, I take that point. I take that point, but at some point in the debate, I take that point, Gaurav. I take that point, but at some point in the debate, we will point out instances where the same policyholders were investing in LIC, and under your government, that money was used to bail out IPOs, bail out, public sector, asset sales. So, the point is, can you take a high ground? We'll come to that in a bit, but Mr. Mathur, I want you to address the point in greater detail that you made at the start of the show, which is the case for LIC to own or operate a bank. And we are given to understand again by government sources that LIC always wanted to operationally own a bank as part of its business diversification strategy. It was never given a license, even though it owns significant stake in several public sector banks, but it has no control. Is there a case, let's leave IDBI aside for a moment, is there a case for a LIC as the chief insurer to own a public sector bank?
I think we are digressing. The valuation issue is totally different. Whatever valuation, IDBI Bank is a listed company. So, all the bad assets, all the inefficiencies or whatever one would like to call it are already built into the pricing. A listed company's share cannot be bought at a price other than what SEBI formula permits. So, valuation is totally a different issue and not a critical issue here. The point is, should LIC own a bank or not? And again I will repeat, whether it should be IDBI Bank or some other bank. If it's a question of bailing out is concerned, why couldn't PNB Bank be bailed out? Why couldn't Bank of India be bailed out? So I think we need to consider all these things rather than getting into the problem who created NPA and what created, who didn't create NPA. NPAs are there, they are in the banking system, they are not peculiar to IDBI Bank. So my again question to the panel, my colleagues will be, should LIC own a bank? I feel LIC should own a bank.
Right.
And if
okay, let me go across to Mr. Gopalan. And Mr. Gopalan, there seems to be right. Yes, Mr. Mathur, I think the broad message from you is that your broad message is that LIC should own a bank. And let me just make a case for why the government believes LIC should own a bank. And Mr. Gopalan, this one's for you. LIC has over 29 crore policies in force. It has a long-term relationship with crores of customers all across India who pay regular premium. And when policies involve payouts, lump sums are credited to beneficiaries. Won't a bank be a natural addition to this value chain? Isn't there natural synergy? I mean, look at an SBI, look at an HDFC, look at an ICICI Bank. They don't have one but two insurance arms, one for life, one for general. LIC is the only one that doesn't have a bank association.
I would rather say that the most ideal situation would be a holding company, a financial holding company, having a bank, having an insurance company. That will be the better option. Otherwise, now if LIC takes over IDBI Bank, then banks are being regulated by the Reserve Bank of India. And for financial stability, they would also like to go through the finances of LIC also to know whether in case IDBI gets into a problem, whether LIC will be in a position to fund its capital requirements. So that will be a load on the regulator himself, that he has got not only has to look into regulating the IDBI, but also has to look into the financial structure and finances of LIC to see whether they have the ability to ensure that IDBI is able to run safely and properly. So these are some of complications that will arise as we go along. So in that sense, I would always say the best cleanest way of doing things will be a holding company, holding LIC, holding a bank. That will be the cleanest way of going about doing it.
Fair enough. That's a good point you're making, and you've also raised a point on how is this entity going to be regulated, what role will RBI have, and that's something that we will touch upon. But Mr. Balakrishnan, if I could come to you, this whole case of LIC's owning a bank, the fact is that LIC already has significant investment in PSU banks. It owns a little over 13% of Corporation Bank, a little over 12% of Allahabad Bank, 12.2% of PNB, already owns 10.8% of IDBI, 10.2% in Syndicate Bank. I can go on. It owns a stake in all 21 banks, PSU banks, and owns more than 9% stake in as many as 10 PSU banks. So I am trying to understand this. There is significant exposure that LIC already has to a clutch of PSU banks, and surely, what is the logic of this entire exposure? I don't understand. I mean, were all these investments you believe made at the behest of just LIC's fund managers? And if so, does LIC have the freedom to unwind its positions in some of these banks?
Well, I think the LIC has always been treated as a kind of a kamadhenu by the government. Whenever the markets are weak, I think everybody expects LIC to put in money, public sector, private sector, old age. I have seen that happen throughout my life. But the point here is that we are now trying to fit a solution to a problem, which we are inventing a reason now saying that strategically we should have a bank. A bank assurance, as the gentleman mentioned, I think you pay enough commissions, any banker will sell your product. I don't see a reason why you need to own a bank, and if the promoter can own a bank, why not? IDBI belongs to the government of India, who is the same owner of LIC, so they can sell the policy. So I don't see any reason why LIC is now trying to say that, oh yes, we are doing it, because I think it looks obvious to each one of us that this is a reason which has been invented after the fact. So I think they should keep out, or if IDBI is so wonderful, its turnaround is so beautiful, I am sure there will be more bidders at better attractive prices. So let it be put up for auction, and IDBI can always go out. The logical thing would be to merge it with another bank or just shut it down. I think that is the way to solve the IDBI problem, rather than hoist it on LIC policyholders and then invent a reason and a rationale for it.
Right. Okay. Okay. Let me take this across to the BJP and Mr. Gopal Agarwal. As a promoter, can LIC keep infusing capital in IDBI Bank, because that is what it will be required to do? I mean, IDBI Bank is a toxic asset, there's no denying that. This isn't just going to be a one-time investment.
No, I tell you, I agree with Mr. Mathur that whatever the problems are with IDBI, that will be already transparently incorporated into its valuation, because the process has resolution of process of NPA is in advanced stage. The government has very well identified them, provided them, and there is a clear cut valuation. Whatever loss IDBI will have, that is almost incorporated. The thing is, at present the valuation of IDBI will be whatever its right value at this point, and I will not go into the genesis of this problem. As Mr. Gaurav Vallabh has said, that's a different issue. We all know how this problem arrived. The second most important thing now is, what LIC, will it be beneficial for LIC to invest into it? IDBI share is already listed. No, government has already infused more than 10,000 crore last year into IDBI. It has been strengthened into the operations of IDBI are being strengthened. With this, if LIC decides for itself, LIC has no, LIC board is independent, they have independent director, they can take decisions which is beneficial to them. And if that synergy of owning a bank is beneficial to them, even you see all the banks have, you yourself have said that all banks are having an different, now fees based activities are increasing at the bank. They are selling products, all kind of mutual fund, life insurance product, credit card, all these transactions are getting lot of fees to the banks from the these activities. So, if this integration of LIC takes, I think it will be beneficial, but ultimately there is an option has to be made by the board. Mr.
Agarwal,
ahead from strengthens of it.
Okay, allow me to interrupt you there, sir. You are saying ultimately the decision has to be taken by the board, but the fact of the matter is, are these decisions indeed taken by the board? Is it the board that will take this decision, or is it going to be a diktat from the government? Gaurav Vallabh, you know, that's the question. How independent are the boards of companies like LIC in this country today, and what is the role of the Congress party there? I mean, and also this whole, I know it's easy for you to today because an opposition to step back and sort of, you know, take a bigger picture, but the fact is, you know, I don't need to remind you that in 2013 LIC pumped in over 4,000 crore rupees to bail out, you know, to buy shares in ONGC before the stake sale. You know, history is replete with instances where, like Mr. Balakrishnan pointed out, LIC is being used for specific you know, purposes.
See, Sandeep, ONGC and HPCL, we can't compare with what government is trying to do here, because in ONGC and HPCL both are having the government money, so they are having government money and there is a synergy. Now here in LIC, this is a one insurer and another is the banking company. So his government is setting an example that tomorrow, because half a dozen of the banks are under prompt corrective action, that tomorrow if they require something, bailout thing, then Steel Authority will be there or BHEL will be there. That's not the right idea. You can postpone this problem because the transaction will not be reflected in your balance sheet, but it is going to have a very the serious implication. And Reserve Bank of India in its various reports, and I quote the Deputy Governor S.S. Mundra's statement, he was very critical about insurance company investing in the banking company or the banks, and he used, Reserve Bank had quoted in their report that there is a contagious impact, because if banking industry is not going to do well, there will be a serious implication on the policyholders. The money money, the policyholders' money which is invested in the banking institution. And for the information of our all viewers, the LIC is having investment in all PSBs, but more than 10% is only for 6 PSBs. And here it is a strategic controlling interest purchase. More than 50% you are trying to buy in a banking company. So I think that why you are shying away from taking the problem from the face, why you are making all types of financial and accounting tricks so that your balance sheet is clean and you are putting the entire blame on the other's balance sheet. If this is going to happen, then the second company, in this our example, the LIC, this company's balance sheet is also going to be spoiled.
Right. Gaurav Vallabh, you make a point about clean balance sheets, but I'm going to talk about, you know, the rationale of why this should be done, and I'm going to go across to Mr. Mathur. Mr. Mathur, you wanted to come in on an earlier point, but I have a pointed question also. LIC already owns a housing finance company with a market cap of nearly 25,000 crore rupees. Now, if this housing finance company were to be merged with an IDBI bank or even converted into a retail bank, won't the synergies be enormous with the parent insurer, from selling insurance to managing banking requirements of people and home loan borrowers and future insurance beneficiaries? LIC will perhaps be one of the biggest retail portfolios in the country, will it not?
You see, LIC already has a lot of synergy with housing finance, because companies, the individuals who take loan also take LIC policies. So, the synergy is already there in the existing setup. There are 2 points I would like to make here. One is multiplicity of regulators. LIC is already facing that. It has an asset management company which is regulated by SEBI. It has a housing finance company which is managed by RBI and NHB to some extent. So, this is not a new phenomena. This is faced by all institutions, ICICI, HDFC, SBI and all that. So, we have to live with this environment. Secondly, point has been made out that LIC holds already 10% or 11% in various banks. This runs across not only banks, across all large companies. LIC is investing, I don't have the latest figure, but some time back the newspaper report said around 1 lakh crore rupees every year in equities. Where will this money go? It has to go to the large companies, large banks. And why PSUs only? Axis Bank, LIC has more than 10% holding, ICICI Bank has about 10% holding. So, it is not just PSU Bank. This holding of 5 to 10% is spread across the entire length and breadth of the capital market. So, and LIC makes large long-term investments. So, any investment in a bank is going to be long-term investment, and just 9,000 crore out of 3 lakh crore or 30 lakh crore or 25 lakh crore of corpus will not much make such a significant difference, provided they are business synergy.
Okay, that's a good point
banks,
you're making.
Whether we accept it or not, banks are going to be largest insurer, are going to be a very large distributor of insurance products.
Okay, that's a good point you're making, Mr.
Bank
Gopalan.
Insurance is not very effective.
Sure. That's a good point you're making, and I want Mr. Gopalan to react to it. You're essentially saying that 9,000 crores is in some sense a minuscule amount given the sort of larger corpus of what LIC invests across the board. Mr. Gopalan, I want you to react to that, and a quick follow-up, because Mr. Mathur again spoke of multiplicity of regulators. Before we address that, there are in any case regulatory hurdles to be clear. Do you expect the IRDA to give a nod to a transaction of this nature? Mr. Gopalan, 2 questions to you, sir.
Okay, see, there is a regulatory approvals in any case is going to be a process here. You see, for instance, the LIC is not permitted to hold more than 15% in any company, any entity. Now, here it will be 40 plus 10.8, 51% closely. So, IRDA has to make an exception in this case. Second, banks you cannot hold more than 10%. Now, we are going to hold 51%. So, RBI has to give approval. So, you have to bring down the equity over a period of time from 51% to whatever 10% or whatever. Third, SEBI, you have got to have the open offer issue is also there. So, regulatory approvals is going to be an issue, but hoping that they can overcome it over a period of time. So, they have to pass through this. But let us look at this, Mr. Gurumurthi. It's like this. you are now, it is not that a big amount as far as LIC is concerned, but you are taking a big risk in one single entity. You do not know after this how much of capital you are going to sink into IDBI, that has not been calculated. You have to keep up the CRAR, you have got to have the tier 1 equity, you have got to find means of funding these kind of things. This LIC, it will be responsibility of the LIC. If LIC were to take it over at the fair value, let us say about 9,600 crores for a 40% at today's market rates, then the further infusion of equity as it go along has to be the responsibility of the LIC. So, that is going to be, we do not know how much that is going to go over a period of time. That is an open ended thing which we have no clear idea at this point in time. So, I would always say that you take an asset, good asset, you go ahead and you have no regulatory issues, from day one you are able to handle it. Second, you should also understand that LIC has never managed any entities, it has no experience in managing entities. Now, with the 51%, they have to manage the entity, and the LIC culture is not there to manage companies and entities. So, this is another issue which you need to kind of look at. Now, third, so these are some of the issues which LIC will have to grapple with at this point in time. So, until these issues are resolved, obviously there are question marks.
Yeah, I think one of the points that I also want to touch upon before we take a quick breather, and Mr. Balakrishna, if I may come to you, won't LIC running its own bank conflict with its investments in a whole host of other banks that it holds stakes in? And I'm just curious to understand, how will the banking regulator RBI react to all of this?
See, I look at it this way. I think so far whatever LIC has been doing, I think the regulators have always never bothered, because it's one arm of the government vis-a-vis the another arm of the government. And as a shareholder, LIC has never been an active shareholder in any company so far. I think they always obeyed political diktats, whether it was the historical case of India Cements and ITC, or the Escorts case, or anywhere. I think LIC has gone ahead with whatever the Babus or the North Block wanted. So, I do not think anybody minds their shares being held by LIC. I think it's a safe haven. So, people look at it that so much of floating stock has been kept away. So, let LIC own my shares. I am very happy. They don't do anything. They don't interfere. So, I don't see that as a problem with anybody or a conflict, because LIC is a very, very passive investor, and as you said that, as my earlier speaker said, that there is no kind of a motivation or a hunger to go and manage something or execute something. I think they do their job, they are in their silos, they are doing their thing. The investments, I think if you count the number of investments they have made, I think there will be hardly 5% of listed companies where they don't have an investment. So they used to be, I think that the size is one, and the more worried, the one point of worry for me is, today you are doing all these things, the government is already using the public sector banks for political moves, whether it is to lend to a sector which cannot repay or whatever. They may be socially necessary, but economically or banking wise it doesn't make sense. So you are giving one more strength to one more vehicle. Instead of merging an IDBI bank with something, you are using LIC. Now you will use an IDBI bank has been abused and brought down like this. So why? So long as the promoters' habits don't change, I think the risks continue. You are only changing the name of the disease. Changing a label doesn't change the contents.
Okay. You're saying you're only changing the label of the disease, it doesn't change the contents. But Mr. Mathur, before we take a quick break, I want a quick reaction from you. Since you spoke on the issue of multiplicity of regulators, IRDA and RBI have never really been comfortable with the idea of LIC owning a big bank. Both may be worried about how they will regulate this entity. What could be the possible regulatory oversight if this deal were to go through? How would it happen?
See, RBI, my understanding is now having second thoughts about diversified ownership. In one or two small banks, they have allowed institutions to own more than 50% shareholding. This is a recent decision. I forget the name of the bank, where they have allowed a change in ownership. And they are even allowing private equity investors to be promoters, not full scale promoters, but substantial promoters, provided they agree to a tie up for a certain period. So, RBI, I don't see so much of a problem from RBI, but IRDA, yes, will have to change its break from its declared or practice policy of not allowing more than 15% in a particular institution. So, there I see a challenge.
Fair, right. So, fair point indeed. I'm going to take a really quick breather. We come back in just a moment from now. I'll request each one of you to continue to stay with us. We come back and put the spotlight on the political part of this privatization. We talk about why is there such little will to privatize, why is privatization consistently from government after government been this bad word. So good to be back with you once again right here on the India Development Debate on ET Now. We're discussing LIC and the IDBI deal. Sandeep.
That's right. Let's put the spotlight on solutions then. We've got a little time to cover. And let me start with you. Let's address it to the politicians first. Gaurav, what is the solution? I mean, should the government just shut IDBI Bank, or should the government keep recapitalizing it with taxpayers' money? If it were to shut, what about the interest of depositors? I mean, there is no clever, easy solution to this problem, is there?
Sandeep, what I believe is that you can't postpone the problem. If you feel that there is a problem, take the problem there, then and there itself. So, if you have to recapitalize the IDBI, recapitalize not in installments, recapitalize it in toto, so that it fulfills the Basel requirements and that can give more credit. So, what is happening now in the partial
from the government also has to recapitalize 22 loss-making PSU banks.
Are not able
every time it raises excess duty on fuel prices, the Congress party will say that the Aam Aadmi is being. Where is the money going to come from to recapitalize all banks? LIC. There is a.
I'm coming to that point, what you are saying, that ultimately it's the taxpayers' money which is going to be used for all those things. But what is happening, that there is no growth in the industry. So, the government is not having anything to do other than to recapitalize this. There is no credit demand, and whatever demand is there, banks are not able to pay. Majority of public sector banks, Sandeep, can't give a single penny of credit because there is no capital. They are in a capital constraint. So, what I mean to say, that there is a serious dent into the banking industry after the all sort of demonetization and Nirav Modi's episode. So, government has to now clean it up. Big bank idea is good, but how it can be implemented? So, you can't rescue and you can't design a creative accounting to postpone the problem to the next year, because year by year the problem is going to increase. You have to provide solution then and there itself.
All right.
So, if there is a IDBI bank recapitalization, do it right now. Don't postpone it.
Gaurav, my problem is with this whole approach of recapitalization, because you talk about depositors' interest here. What about the taxpayers' interest there? I mean, why are we continuing to put good money behind bad? You know, any amount of recapitalization is not going to take care of the 58,000 crore worth of, toxic assets that IDBI Bank sits on. But I still want to get a view from Mr. Gopalan. He's been a bureaucrat, has overseen some of these banks. Mr. Gopalan, what's your view? Because, politicians on the other side keep talking about recapitalization, but money is clearly not growing on trees, and the government doesn't have funds to keep recapitalizing these loss-making PSU banks.
Well, Supriya, I think this is not a single solution of, it has got to be a combination of a lot of things that have got to happen. First, the underlying factors in the economy which has contributed to the bad assets, like your infrastructure, getting the regulations in place, your approvals in place, the environmental clearances in place. You get those things beefed up, get the fuel supply agreement, get the PPAs, get those things done. and improve your infrastructure for getting the coal pushed to the power plants for them to generate power. So, the underlying efficiencies in the economy have to be built up, that is number 1. 2, the NCLT, the process of IBC has to take its course, and assets will have to be disposed of, and provisions whatever made, whether the write back or capitalization has to be done to ensure that the tier 1 equity of the banks are kept in such a particular position has to happen. Third, some mergers will have to be done. Fortunately, mergers demanded by the government as ordered by the government is the only solution at this point in time. We will have some big banks. Some banks will be big enough to handle international level operations, comparable. Some banks will look into only some regions where they are working very strong at this point in time. So, you have got to have a mix of all these things to ensure the banks are brought, and in addition capitalization of the bank. So, you have got to have a mix of all these things working in unison to get the banks out of the conditions they are in at this point in time. There is no one single solution at this point in time.
There is no quick fix, and could agree more with you on that part for sure. But Gopal Krishna Agarwal, the other concern is, how does one ensure that this doesn't set a precedent? Today you have done it in the case of LIC-IDBI Bank. Tomorrow, who knows, someone might say, let's do it for Air India, because I am sure there can be a reason to justify why LIC needs to have significant controlling stake in a national carrier as well. So, what is the guarantee that this same logic will not be used to justify similar purchases by LIC?
The issue is, Mr. Sandeep, that you are going on a debate that we are assuming that the government is pressurizing LIC to buy IDBI. I agree with Mr. Gopalan when he says that there has to be a multiple solution of a problem in hand. If you go into various problems, you also discuss, Supriya also discussed so many problems on the financial market and other industrial sectors. If you go into historically, all the genesis will go into bad policy decisions of the UPA government, and when those came to the light, they just tried to put it behind the underneath the carpet. We have tried to take all these problems head on. We have recognized NPA problem. We have tried to work on a solution to the problem. We have done the provisioning on them, and now even the government has gone on into capitalization of several banks. Already 70,000 crores has been provided for capitalized, and bonds are being issued, then provisioning is being done, and IBC is an important factor through which a resolution of NPA is taking place. You look into the Pragati, how around 10 lakh crore project have been revitalized, started by the personally by the Prime Minister with regard to environmental clearances, with regard to tie-up restructuring of financial restructuring, how Nitin Gadkari ji has done to revive those projects. So, this is that we are going towards the solution of the problem, and at present the solution, the problem is well identified. We are taking it head on, we are working on the solution, and there cannot be a single way of solution. We are also discussing the implementation of the bad bank, good bank, preventive corrective action. If we had not recognized those preventive corrective action, who will know? How we will debate? This is how we have done it, and the solutions are
there is no not from 2000.
There are multiple solutions. In future also there will be more.
No, Gopal Agarwal and Gaurav Vallabh, please let me come in there. I want to come in there, Gopal Agarwal, because no matter what you and Gaurav Vallabh tell me on my show this evening, I don't think any of us, there are 2 anchors and there are 5 of you, I don't think any of us believe that LIC takes independent decisions and the government doesn't pressurize LIC. And I'm not just talking about your government, governments in the past as well. LIC has been used as a milking cow. You may want to deny it, you may want to live in another world, but the reality is that this is not a decision that the LIC board makes on its own, and I think it's better that we realize this sooner than later. But nonetheless, I will take the same question to Mr. Mathur, and Mr. Mathur, you've been in the hot seat.
Just one
small point. How does one ensure the question that Sandeep asked? 1 second, Mr. Agarwal. 1 second, Mr. Agarwal. I'm going to Mr. Mathur right now on that question. How does one ensure, Mr. Mathur, that this same logic is not used to justify LIC buying into something else or SBI buying into weaker banks? I mean, how does one stop this mindset?
Well, I am not a soothsayer, but I can only talk about what is happening now. What the government does 2 years later, I may not be in a position to comment, but it is extremely unlikely that 22 or 23 public sector banks which are having problem will all be dumped in the lap of LIC. I mean, nobody in with a sound mind is going to do that. It can happen at maximum, even you take the worst case scenario in one more case or two more cases, but these are extremely unlikely. The point is, there can be a synergy when it can benefit both parties if LIC acquires a bank. Whether I again got back to my original point, whether it should be IDBI Bank or some other bank, that is for us to that can be debated. But there is some synergy in LIC acquiring a bank, and it can be a win-win situation for both, because valuations are not issue. All the NPAs, all the bad loans, they have already been built into the valuation.
Fair point,
Look at the prices. IDBI Bank was some time back quoting at a much higher price.
Okay.
So the question is, can LIC benefit from this?
Okay, you're going back to the
feeling
point
is,
that you.
if at this juncture they acquire bank, they can benefit.
Okay, I think Mr.
May I make
Gopalan,
a point in this?
go ahead, Mr. Gopalan. We want to make a quick point. Please
May
go
I
ahead.
make
Sir.
a point?
Yes, sir. Go ahead.
Yeah. I want to make quick point. You see, the IDBI Bank is under separate, law. It's a company, whereas LIC asking to pick up a Bank of India something is going to be very difficult, because they are covered under the Bank Nationalization Act. Okay, and they are going to go to the Parliament, and there will be a lot of issues in getting that through. IDBI is an easy candidate for getting it done, because it's just a company. It's a limited company. So that becomes easy. So the answer to your previous question is that will government attempt to do this for other banks? I don't think that's a possibility.
Okay, you're saying that's not a possibility. It's a good point you're making there. But R. Balakrishnan, let me come to you and let's sort of look at it from a sort of slightly larger context. What's happening right now? There are no takers for Air India. The government is stuck with MTNL. It doesn't know what to do. The DOT last Friday went to the PMO seeking for more funds. Even if they were to privatize, there will be no takers for MTNL. You spoke about the fact that why doesn't the government try and privatize IDBI Bank? You and I both know that there will be no takers for IDBI Bank as well. Yet, why hasn't the government been able to learn its lesson on how to manage PSU enterprises, how to unlock value at the right time? Probably some of these privatization had happened a few years earlier. It may have unlocked some value out of it, but it sort of takes it to the ground and then tries to sell the asset when there are no takers.
Well, I think this is a huge legacy issue of companies being run without business plans, without strategies, got into monopoly spaces in the early days because nobody else was there, and then the government kept on supporting it with tax breaks, incentives. Then it became a kind of an elephant which you can't keep, nor you can you drive it away. And then it also became the kind of a tool for you to dole out favors, help out friends. So everybody is interested in keeping it alive. So that is what is happening. And what will happen ultimately is, if you look at a company like LIC today, what is happening is slowly their market share is dropping. Their growth rates are slower than the others, and a lot of growth is coming from selling fixed deposits like single premium products. So ultimately the market loses faith, then there is no more cow to milk. So this is what is happening, and this is what has happened in every kind of a case. There has been abuse of privilege, abuse of power. So I think that is where we are headed in this, because nobody wants a poisoned chalice to be taken. So this is, I think, the malaise which is there, and the way to address is to get out wherever you can in the money, get out. Otherwise you merge, you do something with it. I think there is no game plan for the next 5 years or 10 years. Chairmen come into position with 2 years to retire, and they can't draw up a business plan. There is nobody to do that. And that is what is the wrong with the public sector enterprises.
Okay.
I think that is my take as an independent analyst.
Okay. Mr. Balakrishnan, just hold your thoughts there, because I want to take it back to the politicians. I've just got the last 1.5 minutes on this show, and Gaurav Vallabh, I will request you to be very brief. But the question is that the Congress party has always frowned upon privatization. How much more taxpayer money do you want pumped into loss-making and inefficient state-owned companies? What business do we have to keep these companies running? Because it is really your and my money that's being pumped in at the end of the day.
Supriya, what I want to convey, if there is a headache, go to the doctor, take the medicine and cure then and there itself, before it turns out to be a cancer. So that's what government is trying to do. They, wherever they are failing, if you are failing in disinvestment, accept that we failed in disinvestment. Don't try to hide that. If you are not able to have the fiscal deficit targets in line, accept that. But why you are putting the one problem to the other? So is LIC is in a good shape? Is it a crime that they had done that all bad and junk banks will be transferred to them? That's not the good idea. So
Okay.
why don't you accept the problem from the front? That's what I'm saying.
Okay, I take that point on the fact that problem should be accepted at the front, but you're not answering Supriya's direct question on what is the Congress party strategy when it comes to pumping in more money into inefficient, loss-making public sector enterprises. But let's leave that aside. I don't expect a straight answer to you, Gopal Krishna Agarwal. There were high hopes. There were high hopes.
Can I make a single statement?
Okay, single statement, Gaurav Vallabh.
Single statement is that if by putting the money, if the problem is going to be resolved, then put the money. But if you think that, okay, these are the junk things,
okay, and that's what, okay, fine,
these are not
okay,
going to
you
be
make that
recovered,
point, and we
then
saw that happen.
We have to wind up these organizations.
And we saw that happen in the case of Air India, where you kept putting in money, and and the country is paying the price for that. But Gopal Agarwal, there were high hopes from a government that is supposedly understood free markets, that promised minimum government, maximum governance, had political majority, and yet the government has squandered the opportunity to take bold decisions on PSUs, to bite the bullet on privatization, do it at the right time, despite having the political mandate to do so. 30 seconds, why have you failed?
No, I think the privatization is one goal which has to be depending upon the market capacity to absorb. If Air India, we want to privatize Air India, there is no market capacity to absorb it. How can you sell it? The ultimately issue is that you have to first revive the projects, revive the economy. That's what we are doing, and identify the problems at the each level. If the banks had a problem, we have identified and are strengthening the bank. Now there will be takers. So this is the part of the roadmap, one of the important milestone that we are doing towards market economy. We believe in market economy, we believe in privatization, and but there has to be a valuation question is also there. So
I take that point, Gopal Krishna Agarwal. I am completely out of time. The people of this country
will be strengthened.
Okay, the people of this country will judge the government eventually in 2019 on whether it stuck to its word on minimum government, maximum governance or not. But let's leave that aside. Completely timed out. I can't thank this wonderful panel enough, Mr. Mathur, Mr. Balakrishnan, Mr. Gopalan, Mr. Agarwal and Mr. Gaurav Vallabh for joining us with that perspective on this edition of the India Development Debate. While there is broad consensus that LIC may well need a bank for obvious synergies, the government needs to address the concerns being raised by policyholders who've entrusted their life savings with LIC, and all are now wary that it could all evaporate.
Indeed. Now, the entire deal also raises the big question on the debate over privatization. Why is that such a bad word? Why is it so difficult to dispose of non-performing PSUs? Because this isn't just bad economics, it may not be sound politics after all. But on that note, thank you very much for being with us in this edition of the India Development Debate. Up next is Top 10 Attack.